Welcome back to the Trade Academy. This will be my first video on request. Someone requested I should make a video on how to execute a trade once price gets to an imbalance zone. So if you want to be getting content like this, like and share our videos, and also hit the subscribe button. I'll be making this video very simple and straightforward, so pay close attention. Now, the market has three phases. We have the uptrend, we have the downtrend, and we have the sideways trend. In the Trade Academy, we only trade up and down trend, but the sideways trend, which is the consolidating phase of the market, we avoid such. And this is when price does not have a particular direction. So here in the trade, we try to make things simple as possible. We use our moving average to determine the direction of the market so that we can trade with the order flows. Now, once price is below our moving average, you can see those two moving averages. Once price is below, pushing to the downside, breaking structure to the downside, that means we are in a downtrend. Once price is above the moving average, pushing to the upside, that means price is breaking structure to the upside. We are in an uptrend. So once price doesn't have a particular direction, you can see price is just all over the moving averages. In this scenario, we stay away from such pairs. Now, let's begin. The first thing every trader should always consider is to mark the structure of the market. You have to mark the structure of the market. This will help you to flow alongside with the market direction, with the market trend. And it will help you to spot imbalance. Now let's begin. Now we can see price broke through our moving average, and now we are in a downtrend. So always make sure that you mark your recent lows. For a downtrend, always mark your recent lows. So this is our low, this is a low. So let's mark it out. Take your trend line to mark this low and wait for price to break through. Take your trend line to mark this low and wait for price to break through. So this is how it works. Now, if we are in an uptrend, take your trend line to mark the high. In an uptrend, we mark high. In a downtrend, we mark the lows. So for this uptrend, we mark this high, and wait for price to break through that high. So for an uptrend, this is the next high. Mark this high, then wait for price to break through the high. Always make sure that you mark the high all the time. Make it an habit, because it will allow you to flow with the market direction and you will hardly face losses. In this kind of scenario where we have price going up and down the moving averages, just stay away. Look for other pairs that are trending. The forex market is always a trending market. Look for markets that are trending. And moreover, it's always good to be patient in the market. You have to be very, very patient. Very, very patient if you want to make money in forex. It's not every time you must be in the market. Allow the market to give you what you are looking for before placing trades. Dollar is expensive now. You don't just place trade. Your setup must be ripe. Now for this downtrend, I said always make sure you mark the lows. So if the market is like this, we have a low, we have a low. Mark that low. Then wait for price to break through. You can see the candles that broke through. Now look at the candle that broke through. Let me zoom in. What type of candles did you see? We have black candles, bearish candles breaking through. So what do we do when price has broken through the low? This is the time we start looking for imbalance. So the type of candle that broke through the structure, that broke through that low, this low is very, very important. Look at this. They are all candles of the same color. I call them vector candles. Once you have this, our imbalance zone usually falls within this line. Within this line. That is why I said always make it an habit. Always make it an habit to draw the line, because from that line you should be able to get your imbalance zone, and it's always within that area that broke through the line. Our imbalance zone is always within here that broke through this low. So now look at this. Look at the first candle, the first black candle, the tail of that candle, extend it. The tail of the next candle, extend it. We have an imbalance. We have an imbalance zone. So when price gets to this zone and fill it up, that is where we sell. So you have to be patient enough. Don't just jump into any setup. Allow price to come to that zone. But in this scenario, price nearly escaped the zone. It didn't touch the zone. But if you go to a lower time frame, you will see a touch. So I'm going to be giving an entering model on this. But I'll be making this video into two parts, because I always want to make my videos very short. So once price has filled up the imbalance, that is where we pick your sell trade. You know, the moving average is going down. So that means we have to sell. We should look more into selling. So that is where you pick your sell trade. Then you mark the next structure. Once we have a new low, always mark your new low. So this is a new low. This side, mark it. This was our first low, which we marked. Now this is our second low. Mark it. Then wait for price to break through that low. This is not straight. Wait for price to break through the low. Now we have price breaking through the low. So in this model, this is an advanced model, because the type of candle that broke through that low is in two phases. We have two black candles before the opposite candles. Okay, let me explain further. Look at the bearish candle before it reverses up, and look at another set of black candles. So had it been, the candles are of the same type, only black candles or red candles, depending on your choice of colors. Had it been, it's the same candles, then we can look for imbalance zone around here or around here. But now what we have to do is we have to look for imbalance zone in the two zones. So for the first zone, we check for imbalance. We have one here and one here. So the one price fills first, the ones that get filled up first, that is the one we use. So it happens that price came to fill this first. Though I'll explain further in the advanced video. I will explain further. For an uptrend, you can see price is now above our moving average. Mark out this high. Wait for price to break through. Then after price has broken through, we can now mark our imbalance zone. Now I have marked my imbalance zone with my yellow highlight. Once price comes there, you see price buying. So when price comes there and buys, what we have to do is we start targeting this high. That high needs to be taken out. So we take your trend line to and mark that high. Mark the high. So as price has filled the imbalance and starts buying, we expect price to do what? To break through this high. You can see price breaking through. Now we still need to mark the imbalance so that we can now place trade and for price to break this new high. So you take your yellow highlight and mark your imbalance zone. Yes, this is it. I've marked the zone. When price comes there, it breaks through. So we start targeting this high. So you have to make this like a practice, a model. Always mark the high. So after marking the high, you wait for price to do what? To break through that high. Then come back. Once price is coming back, that is when you start looking for imbalance zone from the bullish candle that breaks through. So if you can practice this habit, you stand to be profitable and you won't be trading all the time, because we have to wait for price to break through our structure low or structure high. Then when price comes back to our imbalance zone, that is where we target. Now for the part 2 of this video, I'll be dropping it anytime soon. Stay updated.